Good afternoon, everybody. Hope everyone's having an awesome 3-day weekend, getting some time away from the computers. And this will be a short and sweet weekend prep and review, small account mastery edition. Um, Mainly being short simply because, as far as setups to review heading into next week, I actually don't have any because direction isn't clear to me, and I'll explain as to why. And something I also want to cover today is show why we decreased all our bullish exposure on Thursday, and something that has changed in the market as well, if you haven't seen me talk about this. And it's one reason why I'm leaning bearishly again until proven otherwise. Okay, so let's just talk about the quick change that has unfolded and why I'm not exactly 100% sure on the direction to take swings. And so this week, I'm anticipating doing a lot of day trading via probably the quick hits, spreads, and whatnot, or drama free, and also maybe some overnight swing trades. So that being said, let me get my pen. So right here is what I'm calling, I'll put BM, my bear market volume profile, and these are my 3-month ones. So ultimately, in a nutshell, you see where this purple box is, it lines up with this HVA right here and this 3-month point of control, and that's where we were rallied and we were stalling right here as price pushed up. And you see this yellow line right here, this is point of control, this is the, if you're unaware, that is where the most volume has transacted at that price within this given time frame. So basically, this point of control was all the way down here, right? And so with this big monthly bull flag, looked like it was a push up to the upside, like a breakout was happening. We're above all of the volume from the bear market. So I was like, yes, okay, things are looking good for the upside. Well, last week that changed as we consolidated right here. Point of control popped to right where we're at, and now we're below it. So what does that mean? Well, initially this was just a little one of the smaller HVA nodes. I won't say smaller. It was the next wall to get over to go up to the upside. And the CPI and PPI and all that stuff that came out last week could have been the catalyst to keep us going, but obviously we're not ready, and the market didn't quite like what I said. It didn't really show inflation was coming down, and which in the end, I mean, if the market's digesting it, thinking interest rates are going to stay higher, so on and so forth, I don't know. I mean, all we could know is a lot of volume came up here and it smacked us back down. That's it. So, in a nutshell, we're going to have to clear this level before we can go any higher. Now, it doesn't mean we can't like come back down here, and I'm kind of thinking we do. I kind of think we come back down to this dotted black line, and it also lines up with this HVA right here. See if I can draw as straight as I can. So we'll come back down, test this level, then maybe come back up for a retest. But who knows? I really don't know. Structurally, if you're using moving averages and things like that, it still looks good to the upside. Like if you were not using volume profile, you would just look like, okay, it's a pullback, and by the pullback and maybe get the second pump up. But I'm looking at this as this is going to be the next level of resistance, and we need to get through it in order to go higher. So that's kind of my view on things. But the pullback, we're also pulling back down to the anchored VWAP from all-time highs, which is this red line right here. So we're right back at it as well. So we're sandwiched below the point of control from the bear market, but we're right on top of the all-time highs anchored VWAP. So I'm like, well, this could go either direction. As far as prepping in the next week, I don't know. Well, I'm going to have to prep after we get a direction. Like, are we going to break back down and maybe retest to go back down? All right, cool. Or we're going to consolidate a little bit more until we break out. So it can really go either way. And sometimes your pitch isn't thrown. And so I'm going to take cash as a position and just do some shorter term swings and just day trade. So, all in a nutshell, I don't know what to expect. So we will see what happens. All right, so let's do some. Okay, now let's review all the trades we did last week. All right, so first, what I was going to do is show all of these drama-free day trades that have been taken. Someone requested in the comment section, you know, how often are you winning? How much margin are you using? Like the question was really in depth. I get this question asked a lot about risk to reward, how often are you winning, margin use, or what's your return on rate from margin? I think it's a lot of questions. Like, to be honest, it doesn't matter. Like, everyone wants these crazy statistic answers. In the end, to me, there's too many variables because you are the one pulling the trigger. Are you reading the information correctly? Are you respecting your risks so you don't become emotional? Things like that. So I don't really worry about those. The only thing that matters is, am I getting my trigger? Am I honoring my stop loss procedures? And do I have am I accepting the risk? Like, that's pretty much it. That's all you have to really think about. But I get a lot of those questions, but I did get a question about as far as the statistics on how often we're winning. Here is the month of February. So we've had one red day and some smaller winners, some bigger winners, and that's just there. But that probably isn't really helping. Let me go to details. All right, so this is all the drama-free day trades done in the small account mastery, and you can see here that we've done 31 of them, 77% winners, 20% roughly, no, we'll call 19% losers, some scratches, max 8 consecutive winners, 2 losses, and all in a nutshell, you can see that our profit factor, which is your risk reward, you can see for everyone we're losing, we are making almost 3. But yeah, and so a total of $2,200 so far. But that's your stats. That breaks everything down for you right here. For those of you asking that question, I get it a lot, but hopefully that helps you as far as how the year-to-date trades have been going. And we'll go from there. Okay, so from here, you see I have, this is all the trades we've done in Small Account Mastery so far. Out of 47 trades, 33 winners, 13 losses. So we're sitting at a 70% win rate. Not too bad. I can live with those numbers. Largest gain, 625. Largest loss, 584. So far, 3,600 of the year. And see, what else can we look at here? Now, what about just the week? How did our week go? See, we did February 13th to 17th. Okay. So we did have to jump out of a good bunch of trades that were looking good, but we'll break those down here in a moment as well. But overall, minus commissions and whatnot, only 298 for the week. 66%, roughly 67% winning, I guess, over the week. But yeah, but let's talk about some trades that we had play out and why we had to bail out a bunch of them because the market changed and we had a decreased bullish exposure. So I'm going to go to overview, calendar. Here we go. I'll hear if everyone wants to see the whole month of February. All right, so on Sunday, we did take overnight swing trade, so I'll cover this one. Okay, so this one, basically in a nutshell, we took an ES overnight, ES futures options overnight swing trade, put credit spread. It was 10 wide. We got $5 credit, so it was a 1-to-1 risk reward ratio. So basically, here's an HVA. Price came down, and we started to get rotation signals. And then we also had this inverted head and shoulders on the 30-minute time frame, and the hourly squeeze that was going bullish. So I was looking for price to move up. What is sad about it is it did end up taking a loss. We stopped out of it for about $100, and literally stopped out on a quick little flush lower, which is slightly annoying, but hey, it is what it is. Because the plan was I needed an HVA level to hold, right? I wanted this HVA level to hold, and what ultimately ended up happening is this got a little shakeout in the low volume overnight. Should just held on, but it is what it is. Price flushed down to here, and that's where we stopped out. And then it stayed for a minute, and then went back up like I was anticipating. But that's ultimately what happened. Ended up stepping out, small loss, and yeah. So you see we got in here and quick flush, and then ultimately right here you see how it just curved back up. But it is what it is. It happens. But let's continue on. All right, so Monday was a busy day. We did our drummer free day trade, and if you want to review the drummer free day trades, I'm just going to point you on over to the Zero DT playlist. I mean, because I review all of those drama-free day trades or all the day trades after I enter them, and you can just they've already been reviewed, so there's no reason for me to go back and do it. So I'll just go ahead and show you. So if you're on my YouTube page already, just go down to these 0DTE trades right here, and this is on the wrong playlist. I don't have to move that, but then you can see all of the trade recaps. All right, so no reason to cover that. Schlumberger, we're in this trade. You can see we got an 18-day called debit spread, looking for price to go higher, and we ultimately ended up stopping out for 344 bucks. So we did a 4 wide called debit spread for $1.80, and you can see here price came down to this HVA, looking for price to move higher. And here's a little bit more of a zoom in picture here. So if price was coming down to this HVA level, we started to get dots and rotations, right? Everything's starting to turn higher, and looking for price to push up as it tested the weekly VWAP. And XLE was looking great at the time. Well, ultimately, XLE did not and brought everything down with it. So we got in here, got a good quick push and flush. So small loss there, got out of the way. The trade setup was no longer valid afterwards. So got out of that trade. We did have a SPY put calendar on as a hedge. As price moved lower, ended up getting out of it for a super small winner. I mean, nothing really to talk about. 84 bucks. It was just a hedge, and ultimately ended up getting out of it shortly. So we got in here. The quick flush didn't hold, so then we ended up closing it for a small gain right there, and let our long swing trades play out from there. Okay, SPY hedge on Chewy. All right, you see we opened a call debit spread. Call debit spread. We entered in a 45.50. Oh, sorry, yeah, 45.50 called debit spread, and you can see right here basically is my bear market point of control. Price broke up, pulled right down to it, and held. So as price was holding this point of control and everything was looking positive, stacked DMAs, so on and so forth. Come on down. Now what's happening at a more microscopic level? Price came down to this HVA, starting to get squeeze rotations. And then we're starting to get dots and arrows off of that HVA level right here as well. And the daily point of control held, and we got the push up. And ultimately, we ended up scaling out half. Oh no, we closed at the 48 level, right at the HVA. So there was an HVA right here. You can see it kind of pointed up right here. I'll get my pin. So this level right here. This price came up and hit it. Decided to close it out, just like it says up here, simply because CPI was the next day. Just want to take the quick hit and get out of the way as CPI was the next day. So that was Monday. A lot of trades that day. Didn't do much on Tuesday, but open Amazon, which we ended up closing. So I just cover this one real quick. So we did enter a 17 days expiration called debit spread. It was a 100, 105. 5 wide spread for only $1.81. And then we ended up closing it for a small loss, basically because the market started to turn, right? That point of control changed. Everything started to flip. So when everything started to flip, it doesn't matter if the setup looked good at entry or not, but the market, if it's going to turn down or turn lower, then everything's going to go with it. So in a nutshell, you see why we entered. I mean, it was a clean trade, in my opinion. I wish it would have played out because it was so clean, but it is what it is. Like, we came down this HVA level, right there. We have our stop in place. Squeeze rotations are starting to look bullish. Everything's looking bullishly here, and we're wanting to scale that up here. But what ended up happening is not that, and you see we got the quick push up. Didn't quite get our first share. Ended here. Got to push up to 101, and then failed, rallied, and now it's falling. So that's where we, got out of the position. Market started to roll over. Took a loss on this one as well. Small one, but it is what it is, and we'll just look for the next one. Can't control them all. All right, so that was Amazon. What's happening on the 15th? Okay, so we did another drama-free day trade. Open Google for Solar and X. Okay, all of these, I believe, we're all actually flat, all these as well. All right, same concept. Entered a 23 days of expiration, put credit spread on Google, came in and caught a falling knife with style, if you will, and did close half for 235. So we got a little bit of credit there, and then closed the whole position, looking for price to or decreasing bullishness exposure. So you see it came down the HVA. We wanted to scale out at the next HVA. Everything was looking bullishly here. On the larger time frame here, you can see how we came down, got a nice reversal candle off of the 50-day SMA. And so we were looking for a pushback higher. We got a little bit of a push and then a quick rejection, and so just ended up locking it up and getting out of the way. So here, got in here, next day closed it just based off of how the market was flipping. Sorry about that. My son just walked into the room and accidentally stepped on my dog's tail, but everyone's okay. All right, so for solar, once again, another loss for 360. This one was looking pretty good. Same concept, came down into this HVA level. We started to reverse. Here is that point of control right there. And here are our targets. Ultimately, it didn't play out. This one flipped around pretty good on us after entering, unfortunately. So here's like the 1 hour chart. See how we got in right here, did to get a quick push up and then flushed down. This one just didn't quite work out. Looked great. You see how it came down the HVA, about to dip, but ended up getting taken out on that one. But yeah, triggered our stop, stopped out of the way. And we talked about Google, and now X. X was courtesy of Scott in the small account mastery. Ultimately, this one was looking great as well. HVA level right here, starting to push up. Had our stop down, everything's looking bullish, and then this one did turn pretty hardcore. So you see it was consolidating, pulled down to the 50, and was pushing up. It was looking great. But yeah, ended up getting out, what, about break even? Okay, we made $4. All right, I'd rather get out for $4 than no bucks. And see, got in right here. It did push up, and then a pretty good reversal. And that's pretty much how it all looks. I mean, a lot of everything that was looking good to the upside. And if you haven't got the feeling, I was pretty bullish on the market, but sometimes story change. That's exactly what happens. So didn't do any of that. Let's see what's going on over here. So I already covered SPY. Yep, covered it. So they just closed the positions. I already talked about them when we opened them, but now we're closing them. All right, so next was Zillow. Now just 29 days expiration, put credit spread, same thing. It was very clean. It was a 50, 45 foot credit spread for 275. So we could get more than a 1-to-1 risk reward. Then look, you just see how everything was bullish. Like I have circled here, everything's looking great. Here's a point of control. And the market did a quick dip early in the morning. We decided to come in and grab the quick dip as it came down to the point of control here. You see how it tapped it quickly and started to reverse. And here's 3 weeks worth of point of controls and a level. So you see how it hit it and started to reverse. Everything was bullish. Everything was bullish. Just had to pick our entry. And we jumped in to grab it. And we're planning on scaling out up here at this next monthly HVA. But the rally came quick and hard. Unfortunately, in the small cap masteries, I actually hold on to the position into the next day because it PDT that pattern day trade rule, and most of them can't hit that strike against them, so I hold on to it. But ultimately, we did push up past our first target. The first target was going to be up here at 45, 4900 or 49, and we did get it, but I held on to it the next day. Sadly, got the next gap down and ended up closing the position. So moved faster than we could for a small account. Ultimately, $48. Okay, like I said earlier, $48 better than no bucks. So, anyways, close that one, and I believe that is it. We still have our put calendar that we have on from the other day. Let's see, did another German free day trade, talked about Z, talked about Schlumberger, and then we do have an Iron Condor. I actually didn't take any screenshots on this, but we do have to take advantage of the 3-day weekend. We did do a within the expected move Iron Condor, looking to collect that premium decay as the market is closed for an extra day. But yeah, that's pretty much it. My plan going forward into next week until another direction is decided is planning on just doing some day trades, maybe a few overnight swing trades, and see what unfolds from there. But that's pretty much it, everyone. I hope everyone has an awesome day. Um, and then I will see y'all again next weekend. Take care, everybody.